Hello and welcome to Moneycontrol. You have tuned into IPO Watch and I'm your host Nickey Mirchandani. Today we are going to be talking about Ask Automotive, which is a company which hits the primary market with an initial public offering. Of course, November 7th is when we're starting with the issue, and the issue remains rather open till 9th November. The company has fixed in a price band between 268 to 282 per share. The company essentially aims to raise around 834 crore. The issue is completely an OFS. The entire proceeds will go to the selling shareholder. But to know more about the company's financial strategy and the growth outlook, we're being joined by Chairman and the Managing Director of the company, Kuldip Singh Rathee. Thank you so much for taking all the time and joining us.
Thank you, Nickey ji. Thank you very much for giving me this opportunity.
Pleasure.
You so much.
Straight up with your expansion plans first. The company has 15 facilities. It stepped on and commissioned the 16th facility. What is your plan to grow both in domestic as well as international markets?
Yes, as you see, in the last 30 years, we are present, and we have our first business vertical is that of safety. Safety I chose because it involves human life, it involves merit, and it involves technology. And this segment, we are doing with two best collaborations of the world and one joint venture with a leading player in the commercial vehicle segment, So this joint venture we took in 2018, and this particular line in the two-wheeler brakes and the braking system, we are the market leaders, enjoying 50% market share, and we have all the marquee clients like Honda Motorcycle Scooter India, Hero MotoCorp, Bajaj, Yamaha, TVS, and Suzuki Motorcycle, and Royal Enfield.
Okay, so I'm holding on to that 3 to 5 year period, 10% growth from the international markets, and moving on to your clients. Good market share that you've had, around 50% in the original equipment manufacturing space, Hero Honda, along with that TVS, Bajaj, Royal Enfield. These are some of your clienteles, right? So 60% of the revenues coming in from the top 10. What's your strategy of diversification? Which is your largest client right now?
At the moment, our largest client is Honda Motorcycle and Scooter India, where we have the 37% of the total revenue coming from that. And that's I've been associated with Honda from day one, because first customer was Kinetic Honda, which was a joint venture of Honda. The second was Hero MotoCorp now, and at that time it used to be Hero Honda. And I've been associated with Honda Motorcycle. So that's the number one customer, and I am so lucky to be associated for the last 30 years. And now we are diversifying into the PV segment. We have already hedged ourselves in the EV segment. All the two-wheeler EV marquee clients, the largest two-wheeler EV manufacturer, also Ather, also TVS, also Hero MotoCorp, and Revolt and Bajaj we have already supplying in that line.
Do you intend to diversify the top 10 client mix from 60% to somewhere less as you expand more even in international geography?
That depends, because the top 3 clients, they occupy the 60% of the two-wheeler market even today. So whatever share they occupy, we'll also have the same share, because we are lucky to grow with the growth of their company.
Okay, so talking about growth in the past, over the last 3 years, in terms of your revenue CAGR, a growth about 25% has been achieved by the company in the last 3 years.
I think the CAGR is little less. It's 17 to 18% overall in the long-term basis in the last. But that's also...
I'm just talking from FY21 to 23 period.
FY20,
That's a 25% growth plus that the company has achieved.
Yes, but in that some contribution was also because of the abruptly rise in the commodity prices.
Okay. So you're not looking at a number which is going to be plus of 25%. You're just saying it could be a little less.
Yes, it has to be less, because as I said, the aluminium prices, after COVID, the commodity prices abruptly increased. They went from 128 to 235, that was the kind of fluctuation. So when the commodity prices increase, your prices also increase. So that in that a contribution is of the abrupt increase in the commodity price.
All right. So what is the number that we can work with? Is a 20% CAGR revenue target achievable in the next 3 years?
I can't tell you the number exactly, but yes, we are going in double digit, and we have grown right in the last 20 years in the double digit growth, and we have outgrown the industry. That's what I can say, and we'll keep on doing that.
Okay, so I'm just going to focus more on the revenue split that you have. AB system, aluminium light weighting, wheel assembly and safety control cables. These are the four product
For
segment. But the real question is that the revenues from AB system has come down from a 52.3% number in 2021 to roughly
that's
41.7%.
because of the second vertical which we started, the aluminium lightweighting precision solution, that has become the sunrise vertical, and especially with the EV coming and with the exports focus, because the major breakthroughs in both these segments have been the aluminium sector. So that segment is growing exponentially, and but the segment that we started in 2010, last year we achieved 991 crores, which was in 12 years, very good growth in that segment.
So, what kind of margin difference can one look at from your aluminium weighting segment as compared to the AB system? How much incremental margin growth is that segment giving you over others?
See, overall, we've been growing in the double-digit margins we have been enjoying, and that we are heading towards that. As you have seen, the Q1 results have been very good, and we are inching back to the double-digit.
But the percent difference between, because you said
Percentage
this is a segment
yes,
which is expected to grow exponentially.
Yes, you are right, because we are getting good margins in this segment also, especially in the exports, now that we have taken the focus.
So what is the percent difference, sir? Margin, how much difference is
Marginal difference.
When you say marginal, it's 2%, it's 3%. What kind of margin difference are we looking at?
Yes, maybe there are 2-3% margin difference in the two lines.
Okay, so AB system, aluminium, of course, is at 3% higher than AB.
No, AB is higher.
So then also you're focusing more towards a lesser margin accretive with the volume
No,
gain?
it's not a question of, it's a volume game, and then we are getting such a good response in exports, which is improving our margins. I'll put it like that. So it will be a growing margin line now.
So what kind of revenue growth are you really targeting from aluminium business also? Because if you're looking at a 41% growth from there, roughly 5-7% is what you're looking at from aluminium in that case.
No, Nickey, I think I can't give future guidance, but as I said...
What is the growth right now? What is the split right now?
I said whatever is the past growth, we would like to achieve that, and which is a growth beyond the industry. We have outgrown the industry always.
Okay.
Our track record is
so just...
We can't... I have the... numbers, I think it's not be appropriate to give.
Okay, what is the split right now? How much aluminium is giving in terms of the total revenue contribution?
See, our braking business is 41.77%, and aluminium has already reached about 38% of the total revenue.
Okay, if that's the volume...
both the businesses are nearing equal,
So that's your plan, essentially.
Yes.
So that pretty much gives away. But your revenue growth, if I look at the larger scheme of things and I compare it with the other OEMs, at 27% seems to be a tad lower than Uno, Minda and Supraduj Engineering, which have delivered 35 to 50% growth in FY23. What explains that? Margins also seem to be a little lower at sub 10% as compared to the industry growth of around 12 to 14 odd percent. What explains that?
No, as I said, our margins are, fixed margins. So suppose we get 10 rupees or 100 rupees, the commodity prices, if in your line, go abruptly high. So in our line, as I explained already, aluminium prices went abruptly high. So if the 100 goes to 130, then you get 10 rupees on 130. So that's how the
focus on aluminium essentially.
Our percentage margins are governed by the denominator effect, and that's how they don't give you the true picture.
Okay. Let's talk about...
Let us say the aluminium prices future come down, then without even working the same way, our percentage margins will look up,
Absolutely. I mean, that's exactly the point of worry, right? I mean, at this point of time, if you look at the volatility involved within that business.
Volatility now is not affecting us. As I said, we have revised the contracts with all the OEMs, and what used to be a quarterly or a 6-monthly lag, now it's back-to-back compensation from the customer.
Let's focus a little bit on your balance sheet. Your debt to EBITDA is around 0.9 times in FY23. Talk about your debt levels right now. What is your comfort level? How much do you intend to bring it down? By when and by what?
In our history, we have never crossed, that was a policy made by us that we will be conservative, will not cross 1 year EBITDA levels ever. So we are following that principle of ours, and we take that only while setting up a new plant. And we have set our biggest plant of our career in Rajasthan, Karoli, with an investment of 300 crores. And this has recently been commissioned, and even the approvals are going from the OEMs, product-wise and the plant-wise approvals are going on. And once it starts production completely, then we are sorted for the next growth of 1.5 years. And as I said, our company is generating cash year on year, free cash, and all the free cash gets reloaded back into the company. And that's how we have, from zero, we have set up the 17 plants.
So all your future expansions?
All the debts normally which we take for setting of the plant gets zero in the next 3.5-4 years.
Point well taken. So all your future expansions essentially will be funded how? It will be through internal accruals only, or it will be a mix of...
It has always been done through internal accrual and the minimum debt. As you will see, the past balance sheet, last 2 to 3 years we were debt free completely.
Okay.
So only because we set up a new plant, and that too very ambitious big plant, because we are focusing on a very big growth in the exports and other segments. That's why this debt you are seeing in the back.
So do you intend to repay that debt?
Yes, why not?
By when?
As I said, we always repay in next 3.5-4 years.
Next 3.5-4 years, you intend to be debt free again?
Yeah. This is the history of company.
Okay, so next 3 years you intend to be debt free?
3.5 to 4 years we will repay this complete debt.
Okay.
Through our cash generation.
Through internal accruals, and you don't intend to take on more debt?
We'll take more when the opportunities come.
Are you exploring any opportunity?
Why not? We are always on the lookout for...
Do you have something lined up?
No, we don't have something lined up, but we are always alert and look for it. That's how we have grown.
Okay, all right.
Any good technical tie-up we get, any good technology we get, because we are a technology player, and we always go for it.
So can some inorganic opportunities perhaps be heard from the company in the news in the next 1 year or so? Is that the near-term target that we're looking at?
Can't say, but as I said, we keep on looking for opportunities.
All right. So I'm going to quickly also capture in the growth strategy, because in your RHP you've mentioned that the company growth strategy includes strengthening position in the evolving EV sector.
Yes.
That's where the growth apparently comes from. At this point of time, how EV compatible is your existing product line?
Yes, that's what I would say. As I just mentioned, that we have taken breakthroughs in all the marquee EV players of the country, two-wheeler EV players, and we were worried that some of our powertrain components, we may lose once the transition takes place. But it is when we entered inside, then because of our focus on lightweighting, thermal management, qualities, because we have in-house design center, with best of the class softwares, and the in-house tool room making, right from beginning, which we had set up, we realized that in this lightweighting and thermal management, we are getting more and more items in the EV. And as Crystal also says, in EV, our volumes and the content, increases by 30 to 50%. So our business is going to grow when the migration takes place.
So what kind of investment have you even earmarked for strengthening your position in this segment? What kind of revenue are you even expecting from the EV segment?
See, again, the revenue, as you say, the EV sector is still evolving. And, there is concern on the FAME 2 subsidies and other things, But once the sector grows, we are already prepared. We are already supplying to them. They are already our customers. So we always grow with the growth of the customers.
Some new names, interesting names that you want to throw up for the EV segment that you're tying up, or you're going to be catering on?
No, not trying to tie up. We are already supplying to the largest two-wheeler EV player of the country, which can't take the name. Also, we are supplying to Ather, we are supplying to TVS, we are supplying to Hero, we are supplying to Bajaj, we are supplying to Revolt. So all these marquee players, which occupy 84% of the EV market, we are already supplying.
All right, Kuldip ji, we're just going to leave it at that. And thank you.
Not only that, I would also like to mention that we have one of the best ROCs of the always 20% and above, which is very, very good in comparison to the peer group. Best asset turnover ratio, the minimum net working capital days, and the minimum in net inventory days. And so we are making or running the organization with so much of efficiency.
All right, that's some growth prospects there. EV4A going bid on the perhaps the margin profile, the debt situation. We've covered all the grounds for you, but that's that. And thank you so much for taking on the time and
Thank you,
speaking
Nickey.
to us.
Thank you so much. Thank you. Pleasure.